Welcome to the monthly update of what are mutual funds buying. Now, we do this every single month so that we understand what mutual funds are buying, how do we track the market, and where the smart money is moving. So, that is what we're going to do in today's episode. So, let's not waste any more time. Let's quickly get into it and analyze the stocks one by one. So, this is our mutual fund tracker. So, let's quickly look at what is happening. Now, the first company we're going to look at is Quant Small Cap Mutual Fund. Now, first, let's look at the returns before we go into the stocks. If you look at the Quant Small Cap Fund Growth Direct Plan, in the last 1 month, this company has performed quite poorly compared to the Nifty small cap index. The small cap index has given approximately 6.64%, and this scheme has given 3.14%. And then they also have their expense ratio. So if you cut all of that, it becomes slightly lower, and they have not beat the benchmark index. So let's look at some of the companies that they have bought recently. Now, in the month of October to November, the new picks that they have bought is State Bank of India, ONGC, Welspun Corporation, Musgao Dock, Cochin Shipyard, Hudco, MOIL. Have you noticed that all of these companies that they have bought, most of them, MOIL, Hudco, Musgao, Cochin, ONGC, and SBI, all of these are public sector companies, which is very interesting why they're going heavy on public sector companies here. And they only have two different other companies, which is Welspun Corp and Welspun Enterprises, and we'll understand a little bit more about this as well because we have put everything over here. Now, SBI makes sense only because if you've been reading about the market right now, there's a very high chance that the interest rates will get cut around Feb, and SBI today is poised to do really well with respect to the growth rate that will happen if this does well, right? So SBI has a very good growth opportunity is what a lot of people are talking about in the market as well. So SBI makes sense. But ONGC, again, I think there was an information that came out. There was a small change that happened in a lot of regulatory aspects of ONGC, but they have bought a lot of companies which are very interesting, right? If you look at Musgao Dock and Cochin Shipyard, recently another news came out that India's 21,700 crore naval defense boost is coming up as well. Now, what you need to also understand is whatever you buy now in December, please understand there is a budget coming up in Feb. So there will be a lot of information that slightly comes out before, right? A lot of expectations, but the smart money already knows what will come in the budget, right? They're doing a lot of research and analysis. So our job is to track this smart money. And from what I can see, a lot of public sector banks has been picked up by Quant Small Cap. In fact, these are not even small cap companies, but they have picked up heavy amount on this right now. And if you look at what they've added Afcon's infrastructure. It was a recently listed company, but they also won a lot of orders as well. So this company has now started doing really well, and it is now going up. They've also added another company called Om Infra, which is a micro cap infrastructure company. So infra investments are also coming up. Again, they have increased stakes in Gujarat state because ammonia prices are rising, as you can see, and fertilizer companies will start doing well. And ammonia prices have come down quite a bit. I think it's around $463 a ton, and it is only going to go up from here. So the additions are mainly Afcons, Gujarat, RBL. Right, rest of the things they have added slightly. Let's look at what have they removed stake from. If you go down, you will see they've completely exited Gillette. They have gone out of BLS and they have gone out of Balrampur. They're slowly reducing the stakes here, but most of the other stakes are pretty much the same. But very weird, what is looking at it here is they're going heavy on public sector organizations. Now, within the budget, what might happen, I don't know, you don't know, but keep an eye out for this. But with respect to small cap, but they're not beating the index right now. They're slightly performing below index. Over a long period of time, obviously, they've done really well, but right now, not that great. Now coming to the second one, which is Motilal Midcap. Let's look at Motilal Midcap. Motilal Midcap Fund is very controversial right now, and I'll tell you why. First of all, let's look at this direct fund growth. Let's see how they're performing in the last 1 month. 9.22 versus Nifty Mid Cap Index 5.92, which is really good. And if you look at, very funny, okay? But if you go here, before I go into the mutual fund tracker, if you go to their portfolio, right? And you go into their detailed portfolio over here, where I go down and say view complete holding, you will see that they have taken a lot of stake. They've increased their stake in Trent. Right now, Trent is almost 5% of their entire holdings, and they're also increasing a lot of stake in other companies as well. So let me show you some very nice example here. Now, if you look at Motilal Oswal's fund, they have added a lot of stake in 2-3 companies, heavy amount of increase. One is Bharti Hexacom, one is Zomato, and one is Trent, as I showed you Trent just now. Now, if let's look at this quickly because it's very interesting. Bharti Hexacom is a 79 p, 74,000 market cap company. Again, a part of the telecommunication sector, so they have gone heavy on this company right now, and it is doing really well, so no doubts on that. Second, they've added a huge amount of stake in Zomato. Now Zomato is sitting at a very, very, very premium valuation. We'll come to that. But recently we also saw that Motilal Oswal had put 1700 crores in Zomato's new QIP. And QIP, basically they did this because they wanted to expand Blinkit, they wanted to advertise more on Blinkit. Now they've also started Bistro, which is like a cafe of Blinkit. So the market, the competition in this industry is very, very, very high. But the only thing that is scary is Zomato sitting at a 375 p valuation. Now, yes, there are arguments here where you say that Shashank P is today, forward P might be better. So I'm saying even if Zomato doubles their revenue next year, the P will go to 150. Even if they make it go 2, 3, 4 times, it will still be very overvalued, right? And usually Motilal Oswal has this theory of Zomato, and has this theory of P ratios, that they don't invest in overvalued companies. So this is something that goes against the principles of Motilal Oswal, weirdly. But again, we need to see what is going to happen, because the risk reward ratio becomes very high. But yes, Zomato is growing, but any small problem in this growth story will create a massive issue. And Trent, obviously, as we know, has started going back up again. It had recently fallen a lot. I had made a post on it in my community that I had exited Trent as well. And after Trent fell down, you will see that Trent is now slowly starting to come back. It's consolidating at 7,000, but this company is going to do well in the future, so no doubts about that. But again, Trent is a very high PE company, so I don't know what. It's very weird, because from what I know, Motilal Oswal is a very low PE long term investor, but now they're playing full momentum, which is very interesting to look at. They've also increased stakes in KE. They've also bought KEI, Supreme Industries, Shally Engineering. They've increased stake in Mahindra. Mahindra, definitely, no doubt, with the new B Sexy that has come out and the other XCV9 that has come out, I think their sales will do extremely well. And the cars are also looking very good. They've increased stakes in Paytm. Recently, Paytm sold PayPay to, I think, sold off one of their business as well. They also sold the ticketing business to Zomato. And recently, they sold PayPay as well. So they're going to get a nice amount of money there as well. So a lot of interesting things happening. KPIT, they have increased stakes as well. So this is something that has recently corrected. It is an opportunity, so they're going back into it. Let's see what they've reduced. They've reduced a lot of companies. Look at this. So they have reduced Prestige a little bit, Geo Financial Services a little bit of reduction, Bajaj Auto reduced because it was a lagger in the portfolio. Balkrishna Industries reduced, Deepak Fertilizers reduced, Tube Industries reduced. Industries, in fact, fell a lot recently. Suzlon consolidating reduced, and they've exited Aurobindo, Tata Elxsi, and GETD, right? So these are the companies, and they've reduced in BSE. But whatever said and done, they are beating the index, they are doing well. So whatever they're doing is fine. Who are we to question anything about it? But interesting to look at here is they are playing huge high PE momentum games with Bharti Hexacom, Zomato, Trent, right? Yes, I do love these companies, but from a mutual fund perspective, little scary, right? Because one small problem and the whole returns can start falling back off. Now let's look at the third fund, which is a fund that a lot of you people like, which is called the Parag Parikh Flexi Cap Fund. Now, interesting fact about Parag Parikh, they are massively increasing their cash positions even now. Like, you would expect that the market has fallen. In the last 1 month, it has underperformed the index, and you would expect that they would now invest a lot of money into the market because it has corrected. But no, they are still keeping a heavy amount of cash position in this company, right? So this is something that we need to really, really understand why. And let me go to the presentation and show you PPFAS. What they have done is they have done very slight increases in companies: Zydus, Dr. Reddy, Coal India. Coal India, yes, because the coal ministry said that we should achieve their annual targets of fossil fuel requirements. So, and Coal India is India's a massive coal producer and user, so that is something that's going to happen. Dr. Reddy is still sitting at 19p, very low P company. Zydus is doing well, right? Kotak Mahindra, they've increased stakes, ITC a little bit, Access. So these are very large cap based companies. And let's see what they've exited. They've exited Indraprastha, Aclia almost out. CDSL reduced, but also CDSL went up a lot. Motilal Oswal, they've reduced. So they've reduced a little bit of AMC companies. As you can see, all four are in the capital markets. They have reduced a little bit in these companies as well, right? But what is interesting to note, Parag Parikh was the only one that actually perfectly predicted the market crash, and they were in huge cash position, right? And now, contrary to popular belief, everyone thought that they will now invest, but weirdly they were not. They're still not investing, and they're still sitting on very high cash pile, which again puts a lot of things into question, right? So as you see, all three different funds are playing three different strategies, which is very interesting to look. Because if you look at Motilal Oswal, they are playing a very momentum based strategy, whereas Quant Small Cap, who should be playing Motilal's game, is actually playing large cap PSU game, and Parag Parikh is sitting on the sidelines with huge amount of cash. So obviously we don't know who's going to do better, who's going to win or lose. But if you remember the previous mutual fund video we did, it was very different from the holdings, and the change in style and change in structure of investing has changed drastically from the last 1 month, just because of one correction. So I don't know, it's very confusing because I don't know what is going to happen. One is playing safe, one is playing very risky, and one is buying large cap companies. So I don't know what is playing out here. Maybe Jan will give a better understanding. But if you only look at momentum, and if the momentum continues, then Motilal looks like he will win again. The fund will start doing better again. But again, very interesting to look at. So this is something that I will keep tracking every month. This gives me a lot of idea and perspective into what is happening in the market. How do I deploy my positions? And this sheet will be shared in my YouTube community for all the people who haven't joined. I give regular updates on that community. And in fact, as I told you guys, on Jan 2nd, I'm going to do a very big thing, right? A very big live experiment. I'm going to do it, and I'm going to come live and show it to you. So it's going to be a very risky thing for me to do as well, but I'm going to give it a shot, and I'm going to do it live in front of everyone. So let's see. So I'm waiting for Jan 2nd, but till then, there's still time, still a lot of time. Let's wait for that. But let me know in the comment section below, what do you guys think about these stocks? And what do you guys think about the new change in strategy of these funds? Let me know in the comment section below. This is me, Shashank, signing off. Take care. See you guys. Bye.